Good morning everyone, my name is Harpreet Kaur and today I'll be discussing the China's economic evolution from year 2003 to 2023. Let's begin with country overview. China is in East Asia and is home to a population of approximately 1.4 billion people in 2023. It is the world's second largest economy with a GDP of 17.9 trillion in 2023, accounting for over 18% of global GDP. China is a global leader in exporting electronic machinery and textile, with its service sector contributing around 48.1% of GDP, followed by industry and agriculture. Over the past 2 decades, it has experienced an immense economic transformation while tackling challenges like global financial crisis and COVID-19 pandemic. Let's move into the next slide, employment trends. From 2003 to 2007, unemployment remained stable as China entered into the World Trade Organization, which drove the economic growth and job creation. In 2008 to 2009, the global financial crisis caused job losses, raising unemployment to above the 4%, especially among the urban migrant workers. From 2010 to 2019, it remained stable as government program helped stabilize the unemployment. In 2020, due to the COVID-19 lockdowns, pushed it to the 5%. By 2023, recovery efforts, government has reduced the unemployment to the 4.67% with services and employing nearly half the workforce. Let's move to the next slide, employment sector shift and challenges. China workforce is undergoing significant shift while 22.8% in agriculture and still there are 29.1% in industry and 48.1% in service sector. An aging population and skill mismatch remain the critical issue for China. To combat this issue, government has invested heavily in vocational training and targeting over 1 million workers annually. This effort aimed to enhance productivity and help workers transition into high demand industries. Let's move to the next slide, inflation trends. Inflation in China has mostly been stable but spiked during global crisis. In 2007 to 2008, global commodity prices surged due to high demand for raw material, driving inflation in China to around 8.7% as it peaks. Food prices saw significant increase, placing pressure on household. In contrast, in 2008, the global financial crisis caused deflation in 2009, with prices falling by minus 0.73%. This deflation was due to collapse in global demand, which reduced commodity prices and weakened the consumer spending. The People Bank of China responded with stimulus measures to stabilize the prices. Let's move to the next slide, unique inflation policies. China's inflation management involves carefully monitoring of its consumer price index, which is updated every 5 years to reflect changing consumption pattern. The Public Bank of China uses tools like interest rate, reserve requirements, and exchange rate management to control inflation. During the COVID-19 pandemic, supply chain disruption and weak consumer demand caused temporary surges and subsequent low inflation. By 2023, inflation was just about 0.23%, reflecting weak post-pandemic consumer spending. Let's move to the China's GDP. China's GDP growth over past 20 years highlights its resilience and adaptability. From 2003 to 2007, GDP grew at over 10% annually and driven by booming export, manufacturing and infrastructure investment. This period coincided with the China's increasing integration into global marketing following its World Trade Organization accession. In 2008, financial crisis led to reduced global demand, but China's massive fiscal stimulus sustained growth at 9.2% in 2009. Infrastructure spending and domestic consumption helped the country to avoid recession. However, by the mid 2000s, growth slowed to around 7%. Economy shifted from manufacturing to services. The COVID-19 impact caused a contraction of minus 6.8% in the first quarter of 2020. But swift recovery measures, including export-driven recovery and domestic stimulus, helped to achieve 5.2% growth in 2023. Let's move to the next slide, China's GDP growth patterns. China's GDP has experienced both peaks and valleys over the past 2 decades. Key drivers of growth include export of electronic of machinery, government-led infrastructure investment, and a growing middle class has fueled the domestic consumption. However, the challenges such as 2008 crisis, COVID-19 lockdowns, and a real estate slowdown in 2022 caused a temporary decline in growth. For instance, in 2022, growth slowed to 3% due to the combination of low consumer spending and issues in the real estate sector, a major contributor to China's economy. By 2023, government fiscal measure and export helped GDP rebound. In this slide, we are going to discuss the GDP per capita trends. GDP per capita, key measure of economic well-being, rose significant over the past 20 years. In the early 2000s, the rapid industrialization and export drove a sharp increase in income levels. By the 2010, the structural shift outwards service and higher value industries contributed to more sustainable growth. However, the population dynamic have impacted per capita growth. Slower population growth since 2010 and aging population have moderated the pace of income increases. Despite these challenges, China's GDP per capita remains a success story, reflecting of its rising global economic status. To conclude, China's economic journey from 2003 to 2023 is a testament to its resilience and adaptability. Over these 2 decades, China shifted from export and manufacture-driven economy to one increasingly powered by service and domestic consumption. It managed stable inflation through sound policies, maintained strong GDP growth despite global crisis, and addressed the employment challenges through initiatives like vocational training program. Yet the challenges remain, including demographic pressure, skill mismatch, and real estate issues. As we look to the future, China's ability to sustain growth while navigating these challenges will define its continued role as a global economic powerhouse. That's all. Thank you.